well detailed video on how to go about using less to make more risk approach. That's just what I call it, because if you are to think of it, it's like using just little to make so much. So I am actually making this video for you guys, right? All of you guys. I'll be showing you, explaining in details how this risk approach work for me, right? And how you can take advantage of it without literally risking too much. And how I stack in more positions, when I stack in more positions, and how I do it conservatively, right? It is an aggressive way of trading, but you do it conservatively. Now, let me explain, all right? I will start from the beginning so we can get it before I then move to the chart. Now, let me explain. Let's assume I have 1,000 US dollars, right? Let's assume I have 1,000 US dollars, right? Which is normal for any trader. This is my trading capital. Now, you will agree with me that what we've been doing in time past, or what we do most of the time, is I calculate my risks or whatsoever. Probably I'm risking $25 on it, right? And I calculate my risk, and any trade I'm opening, right, this is my stop loss margin, right, $25, which is also very okay. And probably on this $25, I take 1:3, right? 1:3 will hopefully give me $75 profit, right? And if I lose this trade, I go back to I lose the $25. If I win the trade with 1:3, I'm making $75. This is the regular way of we doing things. And what you do in most cases in this scenario is you try to live up to the expectation that your win rate must be very good. At least 50-60% win rate must you have to have a very good win rate. Now, I want you guys to think about something. Just take your time. I really want you to think with me. What if with this $25, I can make 500 US dollars? Yeah, same $25 that this person is risking to make $75. What if with this $25, you can use it to make 500 US dollars on a single trade? Now, this is the approach we want you guys to see. I want you guys to see. And it's okay if you want to do 1:3, 1:2, the normal regular stuff that almost all traders are doing. It's okay, yeah, you can stick to that. But think about it. What if this same $25 you are risking to make $75, you read that same $25 to make 500 US dollars, 1,000 US dollars, 250 US dollars, 200 US dollars? Think about it. Now, this is the approach I'm trying to show you. The same risk, but different rewards, right? And how do we do this? Now, in most cases, this person that is risking $75, in most cases, rather, when he opens this trade and he sets stop loss, a whole lot of traders tend to move their stop loss when they see the trade is not going their way. But it won't happen in this case. It's $25, $25. No moving of stop loss, no shifting of stop loss. In fact, no stop loss, because when you lose, you are only losing $25. Now, how do we do this? Since we know that the first thing you have to do is, what is your risk appetite, right? So I'll use risk appetite as RA, right? Risk appetite simply means how much can I afford to lose? Now, once I have determined my risk appetite, say probably $25 or $20, right? Let's say $20. And this $20 simply means my stop loss, right? $20 simply means my stop loss. Just like this conservative trader would do, $20 simply means my stop loss, right? I'm not risking anything more than $20. And what do I do with this $20 now? I first look at it. Now, let's do a quick calculation. Now, it simply means if you are going to blow this your account, it simply means you have to trade how many times to load this account. It simply means you have to trade 50 times to do what? To blow this account. right? You have to trade 50 times to blow this account. And if you are trading 50 times to blow this account, I don't think, when I say 50 times, I mean you have to trade consecutively in sequence, 50 losses. You have to take 50 losses to blow this account. That's probably not possible, right? You're a good trader, and it's not technically possible. So, good. So that means there's high probability you're not going to blow. With this method I'm teaching you, there's high probability you're not going to blow your $1,000 account. High probability, honestly. Now, let us look at how we can do this thing with maximum risk, top-notch risk approach without you doing too much, risking too much, but making so much. Now, this is what we are going to do now. On this account, right, on this particular account, which you have under your broker, right? Let's say under our broker, I have this account, I call it 1. What I will do now is to open a new account under my broker. So I call this account 2. And this is the account 2. This account 2 is what I will be trading with. Now, all I will have to do is to transfer $20, which is my stop loss or my risks, into this account, right? Now, I've transferred $20 into this account. Now, the question is, what next am I going to do? What next am I going to do? Now, what I'm going to do is, I'm going to quick trade on this account because now I have $980 on this account. I'm going to pick any trade I'm picking for this particular $20. I'll pick only one trade or thereabout, and I go full margin on it. Now, let me explain. Now, I have on my account 2, right? I have $20 as my trading capital right now. That's my stop loss. So I'm making my stop loss because my risk capital is 20. I'm making my stop loss my what? I'm making my stop loss my I'm making my stop loss my risks, my risks, my capital, right? I'm making my stop loss my capital. Now, it is important to know that everything I will be risking on that particular trade, the next trade I'm going to take, is just $20 because it is only $20 I'm going to trade with, right? Do you understand now? Now, let me quickly clean this board so that on account 1, right now, to make it clearer, and I have on account 1 $980, right? On account 2, now my stop loss has been moved to this account. My risk appetite, anything you want to call it, and my stop loss is now my trading account. Now I've moved $20 from here. This was initially 1K. I move it to here, and I have this. Now the question now is, what am I going to do with this? I'm going to do 2 things. 2 possible outcomes will happen with this account. It's either I go home losing this $20, right? Or I go home big. And what do I mean I go home big? It's either I lose this $20 or I make a whole lot of money, right? So now I have clarified that. Now, since I've clarified this particular issue, now the next thing I think about is, how do I enter my position probably when I have a good setup? Now, I'm not here to teach you what strategy to use or what strategy you shouldn't use. No, that's not my concern right here. This is just risk management, risk approach to trading. So regardless of whichever strategy you are using, all you need to do is, I don't just jump, right? I know, okay, I don't have the luxury of just blowing this $20 anyhow I want. So I have to do it constructively, right? I have to do it conservatively. Now, I don't just jump into trade entering 0.5 on $20, right? Entering 0.5 on $20 or entering 1.0 on $20. No, that's not how I do it. Now, how do I do this? I come and I ask myself that, okay, according to my strategy, what is the normal stop loss I use, right? According to my strategy, the normal stop loss I use is about 10 pips stop loss. Now, ask yourself, according to your own strategy, what stop loss do you use? Let's say you use 20 pips, right? Now, if you are using 20 pips on $20, what lot size are you supposed to start with? That's how I do my things, right? What lot size, at least I don't just jump into it. My system does not give me 2 pips stop loss, 3 pips stop loss margin. No, my system gives me 10 pips stop loss margin. We have some people that are brilliantly good that their system give them 2 pips, 3 pips stop loss margin. That is excellent for them. That is what they know how to use. That's why you see them, once they enter the position, they are already loading with 3.0, 4.0. No, that's not what I do. I work according to my own system, right? Now, the question is, what do my system give me? My system gives me a leverage of 10 pips. So I come here and I ask myself that, okay, if my system give me a leverage of 10 pips, what lot size can I start with? With this 0.2, with this $20 to blow this account at 10 pips. That is, I will be using 0.2 as my initial entry. So did you see? I didn't just say, it is still the same method, right? I didn't just say I'm loading it with 1.0 on a $2 on a $20 account. No, I have to do it constructively, all right? Because I don't just want to blow a lot of $20 before I can see my first win, right? I don't just want to gamble it. I'm trying to do it constructively. Now, this is not gambling like a lot of people are going to call it. No, it's not gambling. It is common sense. It's just simple mathematics, simple logic. Now, what I do now is load 2.0, right, on this my $20 account. That means if this trade goes against me, for my initial entry, I have just 10 pips for it to go against me, right? But if it goes in my way, I will start. The moment it starts moving in my way, then I will start stacking in more position upon more position. So let's assume I enter with 0.2. The next entry I probably see, I'm going to put 0.2 again. As it keeps moving on, I'm going to start stacking with 0.2. As it keeps moving on, I'm going to start stacking with 0.2 until probably it gets to where I want it to reach. And when this market will get here, I'm already up by, let's say, $300. When I'm up by $300, the same method, the same thing this guy is doing here, this particular guy that is doing, the conservative guy that is doing $20 to $60, right? That is doing $20 to $60. It's the same thing I will be doing. But this time around, I'm making from $20 to what? To $300. Look at the difference. And if the trade goes against me, I've already made up my mind that it is only $20 I'm going to risk, I'm going to lose. Now, if the trade goes against this particular guy that is using normal stop loss in the $1,000 account, there is high probability that is going to move is stop loss down. Why? Because it believes the market is still going to go his way. Now, this one, we only have 2 options. Very strict approach to this thing. I only have 2 options. Either I lose only the $20 or I go on with the big bag. Right. Now there are days that you might be in deep profit and all of a sudden the market starts to reject. And once there's confirmation that market is rejecting, take your time and leave the market all alone. It is actually this simple, right? You don't really need to stress your trading, right? So the next thing we'll be considering right now is how I enter these trades, right? How I enter these trades. Okay, now, let me now give you the practical example of how I do this thing, right? And some trades I pick, like this trade on Friday and some other trades. I will use it as an example. I'll tell you how I start in position and why I start in position. And just open your mind and you will get it right? So how do I do this thing? Let me use my Friday's trade on gold. So look at my chart well, you will get what I'm trying to say. Now, initially, I was able to pick a sell, a sell on gold, all right, from this particular position, and gold went against me. And this time around, I was using a $50 capital, right? I was using a $50 capital. Gold started pulling up against me. All right, gold started pulling up against me. And when I say I was using a $50 capital, that's I entered with because it's good, wave volatile. I wasn't using 10 pips. I was using 20 pips stop loss. So I entered with 0.25 around here, and gold pulled up against me, and I closed it at. I quickly closed my trade at $42 loss. Right, $42 loss. And after I closed my trade at $42 loss, I was like, okay, let us see what will happen before the news. And at that particular point in time, I added, since I have $8 left in that account, then I moved $50 in. So I have $58. So what I did now was, when gold, before the news, I saw my entry. You might want to ask entry, but of course, no, I'm not here to teach you. I'm not here to teach you strategy, right? You can do this on any strategy. Just try and weaponize whatsoever you have. And I then pick gold. I think around somewhere around here as buy, right? No, somewhere around here, if I'm not mistaken, right? As buy. And after I pick gold, right, I pick gold with $58 capital. So I entered with 0.2 at first, and I think I entered with 0.5 around up here, 0.05 around up here, which makes it 0.25 in total for my entry position. Then I waited for the news. At first, market was going against me. I was not really bothered because I was going to lose the $58, which is okay by me, right? I don't mind. But this time around, that's my risk appetite. I do not mind. But this time around, I was actually waiting on what gold was going to do before the news, during the news. And one thing I just know is that regardless of news is used to move the market or to stop hunt people. So before they started moving the news around 1:15 Nigerian time, West African time, market first dropped, which means they were trying to stop hunt us. And I was just waiting. I think as at that time, my account went to as low as minus, I think minus $52, right? Yeah, as low as minus $52 dropped down. And all of a sudden, 1 minute to the end of the candle, they snapped back up and they closed the year. And the moment they opened the candle, market was just jumping. I've not added any position with that 0.25 or thereabout. Market was, I was around, as at here, I was around $210 up. Yeah. So market dropped down back, he dropped down, and came back here. You could actually be very, very scared again, but it was still confirming with my entry. So I was not really bothered. And look at what I did. Yeah. So what I did was I was still waiting. Market closed back up. Market closed. Now, how do I stack in position? I already entered my position right here, right? Now, when market already gave me, market was buying, and all of a sudden started giving me some opposite candles, some bearish candle right here. Now, how do I know that this trend is going to continue? Is this the next, any candle that closes above the initial high, I know this market is still going to go up, right? At least. I don't know for sure, but at least from experience, a bit of experience, I know this market is still going to go up. So I waited for a candle to close above this high, and I got that candle right here, and I stacked in extra positions right there. I think I entered another 0.1, right? So market pull up. I didn't enter any position. And all of a sudden, market pulled down back. I was happy that market was pulling down back. The moment market closes, I stack in more position. And that's just how I do it. And when market moved up here and moved down, I was like, okay, so what are we expecting right here? I couldn't stack in position because market was already giving me, market didn't, this candle, next candle didn't go back up. And, you know, in most cases, a good number of us close the trade right here, right? But I want you guys to see something, right? All I just need to do along this way on how I start in position after my entry, anytime, let's assume it's a buy market, anytime market closes above this little retracement, I'm stacking in position. And then market closes above this retracement, right, above the initial high, I'm stacking in position. That's just how I do it, right? And my entry still remains the normal conservative way of trading, right? So with this regard, it's quite difficult for you to blow your 1,000 US dollars account, trust me. Now, on this particular trade, which I saw, well, I missed it because of network, right? How would I really missed this because this was my entry. I was waiting for 1 minute to close before my entry, and then you know MTN network both happened on Friday and on Thursday around this particular time, and MTN network just went off, right? It was a perfect setup for me, and just 1 minute before the close of this candle, I was supposed to pick my entry, and all of a sudden MTN network went for like 2 minutes, no network at all. So I couldn't pick this long sell, right? But then I picked the buy back up a little, right, before I close the trade. Now, I need to explain one last thing before I end this trade. Okay, let me use one more example of another trade and how you should have picked it, right, of another simple trade and how you should have picked it. Now, look at this example. Let's look at this as example. Let's assume I picked my entry here, although I didn't pick this trade because it didn't perfectly give me my confirmation. I picked my entry here, market moved up, right, and I'm going to enter a new position here. All of a sudden, market pulled down back, market pulled up back, pulled down back, didn't break through my entry, my stop loss is still lingering, and market pull up back again, closes below above the high of this initial retracement whatsoever. I'm going to put in extra position right here, especially this one that shows way clear that it has closed above all this region right here. I'm going to pull in extra position and just wait along the line. Some people find a way. There are other ways to stacking position along the line. Some people use 1 minute to stacking position. If you know how to do that well, you can go ahead and do that. So my next entry would have been here, right? And then I'll pick my next entry here. I just stack in a lot of position, especially when it moves away from my entry point and I see that opportunity, I stack in position. So that was how I also do this last week, Friday, upper Friday, 2 Fridays ago, as I entered. This was way sweeter. Right, I did I think a $7 account, right? As I entered, right, on one of my accounts, I did $7 to about 125 or 120 thereabouts. So as I entered around this region, I just waited, market closes high, I entered more, market moved up, retraced, market moved up, it gave me this retracement, moved up, I entered more, gave me this retracement, moved up, I entered more, then retraced again, then moved up again, I entered more, then retraced, moved up, closed above, I entered more, then retraced again, moved up again, I entered more. No, I didn't enter here. Sorry, I closed the market exactly here. Yeah, because it was exactly here. Yeah, doing this follow the candle because of this pin bar, right? And then I saw the candle that was forming right here. I just closed my trade from $7 on gold to what? To I think 7.8, about $8 to $125. How do I enter? I entered with 0.3, about 20 pips stop loss. Can you see? Sorry, 0.03, not 0.3, 0.03, and I kept stacking up. That was just how I did it. Now, one more thing before I go, let me give you just one more secret. There's something that's always happening in the day, in the week, right? I don't know. I tell people a lot. All I need to do in a week, I can be trading Monday to Friday, trading 20 pips, 50 pips, stacking position along the line, using lower time frames. But there is one thing I know about the week. at least once in a week, there is always a trending market. Like what we have here, this is a trending market. It happens once in a week. And all I need to do is position myself to pick on any particular pair, is to position myself to pick at least one trending market. At times it happens twice, 3 times in a week. Does not matter, but at least you must have one in a week, right? So most of the time, what I position myself to do, why I pick short time trades on probably Monday, Tuesday, because I know this trending market happens mostly between Wednesday and Friday, mostly, not all the time. At times we have on Monday, the market will just move in one direction and all like that. But mostly between Wednesday and Friday, all I do is to position myself, right? Position myself. And the truth is that you might lose accounts, right? You might lose your $20, $30, whatever risk capital you are using. But the truth is this: think about it. You're always going to make it back big time. Now, I'm talking about $20, $50, $100 risk capital. I know some guys that trade 1,000 US dollars risk capital. Yeah, like the amount they can afford to lose. And that's when you see them flipping $1,000 to 25,000 US dollars. Same principle. Right. Now, there are some guys that all they just do, they don't stack in position. All they just do is when they find their entry, they just stack in immediately from there and wait for the market to move. Yeah, they have their reasons. They probably their stop loss is about 2, 3 pips, 4 pips, 5 pips. I don't have the leverage for that. So I just create a strategy that works for me according to my knowledge and the capacity I have. So I had to just create a strategy that works for me. I can't just stack in position for my entry points and trade goes against me and lose. My method gives me about 10 pips, 15 pips stop loss. So I just have to be creative with how I do my own. So you could do your own anyhow you want. But the truth is that the fact that you can afford to keep your risk capital, your stop loss capital into a new account and going full margin on it will always put you on the edge above any other trader. Trust me, it will always put you on the edge above any other. What you struggle for 10 trades to make, you can make it within 1 trade. And if you are good enough, if you can take just 3, in fact, I'm not even stressing myself. Make 3 wins out of every 10 trials. You are all by times 40, times 50. 3 wins, 3 good wins out of every 10 trials. You are all by times 10, 20, 20 times 50 of your capital. Is that not good? So, but anytime you are trading, even if you make 1,000 US dollars, 20,000 US dollars, make sure you withdraw it back into your initial capital and always stick to your stop loss risk capital. Right. I think that would be all for now. Don't forget to subscribe to our channel because more interesting content is still going to be dropped. More very educating content to make you become profitable is still going to be dropped. And ensure you let me know your thoughts about this secret I just shared again. And and you can as well tell other people about this interesting channel. Thank you. See you next time.